The basics. What is a stock market? At its core, a stock market is a marketplace where ownership in companies, known as stocks, is bought and sold. Investors come together here to trade shares, enabling companies to raise the capital they need to grow. This mechanism is a powerful engine in modern economies, funding innovation, building infrastructure, and generating wealth, not just for large corporations, but for individuals, governments, and entire nations. When a company goes public, it's essentially saying, "I'm open for investment." Investors buy shares, betting on the company's future. If it grows, so does their return. If it struggles, so does their portfolio. It's a high-stakes dance of risk and reward that has shaped economies worldwide. But what about Africa? How has this financial mechanism evolved on the continent, and what role does it play today? The roots: stock markets in Africa. Organized stock exchanges in Africa are relatively recent. While markets like New York, London, or Tokyo have existed for over a century, Africa's stock markets largely emerged post-independence. The oldest is the Johannesburg Stock Exchange, JSE, established on November 8, 1887, during South Africa's gold rush. It was created to facilitate trade, sparked by the discovery of gold in the Witwatersrand. For decades, the JSE stood alone, primarily serving mining companies and white investors under apartheid. However, following the wave of independence movements in the mid-20th century, more African nations began exploring capital markets to develop their economies. In the 1990s and early 2000s, a boom occurred. Countries like Ghana, Kenya, Nigeria, and Egypt established their own stock exchanges, aiming to attract investment and promote private sector growth. These exchanges were more than trading floors. They symbolized economic maturity, signaling that African economies were open for business. Still, the journey wasn't smooth. Low investor confidence, political instability, limited financial literacy, and underdeveloped infrastructure held markets back. Many exchanges remained small, illiquid, and disconnected from the daily lives of most citizens. The modern shift: what's changing today? Despite challenges, African stock markets are evolving rapidly. Technology plays a significant role, with mobile trading platforms and fintech startups lowering barriers to entry. More Africans are participating in the market. Young tech-savvy investors are bypassing traditional brokers, buying shares with just a few taps on their phones. Cross-border integration is also gaining momentum. The African Exchanges Linkage Project, AELP, a joint initiative by the African Securities Exchanges Association, ASEA, and the African Development Bank, AFDB, aims to connect the continent's largest stock markets. The AELP facilitates cross-border securities trading among 7 participating exchanges, representing over 90% of Africa's market capitalization. We're also witnessing a rise in new listings, from tech companies in Nairobi to financial services firms in Abidjan. Countries like Rwanda and Botswana are positioning their exchanges as regional hubs, focusing on good governance and investor protection. There's growing interest in sustainability, with green bonds and ESG-focused listings gaining traction. Perhaps the most significant shift is the recognition that capital markets can be tools for inclusive growth. Stock markets aren't just for the elite anymore. They're being reimagined as platforms to empower small businesses, fund public infrastructure, and help regular people build wealth over time. Looking ahead, the African stock market opportunity. Africa's population is young, entrepreneurial, and increasingly connected. As urbanization continues and incomes rise, the demand for investment opportunities will grow. Stock markets, if well regulated and accessible, can meet that demand. To achieve this, governments need to build trust, improve transparency, and support financial education. More companies need to list. More people need to invest. Above all, markets need to reflect the real economy, not just big banks and telecoms, but agriculture, health, tech, and trade. The potential is immense. Imagine a continent where a farmer in Malawi, a teacher in Ghana, or a student in Senegal can own a piece of the future, not through aid, but through equity. That's the promise of Africa's stock markets, not just as places of trading, but as instruments of transformation.